Alright, so what I'm going to do is I'm going to go over a particular turning point and show how it occurred. So here's the daily, over here the rally, and this is a very small turning point. So you have this turning point and you have a pullback and then another turning point. So I wanted to show how this turning point occurs. So for that, I'm going to go to this chart over here on the right. Alright. So let's take a look at that chart and see what happened. So you can very clearly see, and let me just bound the trend, right? So you have a couple of tools to examine trend and identify how this turning point turned. So I'm going to go over that and explain how it's done. So when markets are going up, you want to see what's going on with demand and supply situation. So when it's about to turn, there are a couple of key behaviors that you should look for. One is shortening of the thrust. Two is lack of demand. Alright, so these are just two to get you started, to examine the trend, because you know that when the trend is up, demand is in control. So what the first one does is, yeah, I know, like they'll say it's momentum, etc., etc., but the idea of shortening the thrust is like the buyers are not buying the highs. They're not buying the highs. So when they don't buy the highs, you want to examine the pullback to see if they're buying the pullback. And if they're not buying the pullback and there's aggressive selling, you have a shot at a change of trend. The other thing is a lack of demand. Lack of demand on rally highs is telling you the same thing, that they're not buying. And usually it starts decreasing from rally to rally to rally, just like shortening of the thrust decreases from high to high to high to high. So we're going to be examining, using these two tools, the demand. What's the demand? Is just the up wave. Up wave is demand, down wave is supply. Up wave is demand, down wave is supply. So we'll be examining this. So on the left hand side, in an uptrend, we are going to be examining demand using these two tools. When they present themselves, we also want to see what the supply situation is like. So how are we going to examine supply is basically, again, just typical change of behavior. Change of behavior while seeing, is it breaking the lows? Is it breaking support? Is it making lower lows, etc., etc.? And change of behavior, I know a lot of folks are trained to watch volume, but you got to watch price. Many times change of behavior won't be evident. It'll be there in volume, but it's not very evident. In price, it's going to be very evident. So I understand, like, you know, folks who keep watching volume, but you're missing the point if you're not looking at price. So here we examine the demand wave and see it's 544, and over here it's 518, and over here it's 867. Do you see lessening of demand? It's increasing. I mean, here 544, 518, it's very minor. Just say it's the same, because 544, 518 doesn't mean nothing. It's around the same. 867, it's increasing. Here it pulls back some 517 and then 204. And what we notice is, from a demand perspective, it did dip and there was a shortening of the thrust, and it did lead to selling. You see? Why? Because they were exhausted, meaning the demand pulled back some, and the thrust was unable to go higher, so they're not buying above here. Okay, so we know that, and selling does come in. But remember this, selling doesn't mean jack unless it makes lower lows. So over here, all it did was go back to support. And as I explained, when you have shortening of the thrust here, they're not buying. The breakout buyers are not buying. But that doesn't mean the pullback buyers are not there. As the market is sold here on this expression of supply and this down wave, big down wave, the pullback buyers are still there. This is why the lower low tells you that the pullback buyers are not there. The shortening of the thrust tells you that the breakout buyers are not there. The lower low tells you that on the pullback, the pullback buyers are not there. So in this case, we had a shortening of the thrust telling you that the breakout buyers are not there. So it pulls back, and what do we see? It rallies. What is that telling you? The pullback buyers are there. So if they're there, it's not going to break trend. And they're still there on this test. So again, goes up. The volume picks up on 1037. Then 904. It's slightly less, but it's still a lot, meaning there's enough demand there. And then, then we keep looking at this. What do you notice about this? It goes from 904 to 263. Before it went from 1037 to 904. There's still good volume there. But on this rally, it's only 263. What is that telling you? That's telling you it's in trouble. That is telling you it's in trouble. Specifically, it's telling you that there's lessening of demand. So using our tools of demand, we see the second condition is there, and this is very evident if you just draw a little trend line from 1000 to 904 all the way down to 263. That rally was on crap volume. And there's also a shortening of the thrust. Here. So what is this telling you? Breakout buyers are not buying, and that's why it's not going higher. Not only is there lessening of demand, but there's shortening of the thrust. All that's telling you is that there's lessening of demand, breakout buyers are not buying. So now what you want to do is see if the pullback buyers are going to buy or not, because it's going to pull back. And the supply comes in. It's not the biggest, but it is big. More importantly, you're going to look at the price. This is the biggest down wave in 14 waves. Okay, so now it's going back to support on big down wave. What is that telling you? It's telling you there's a problem because support buyers are not buying. So now you have breakout buyers not buying, as indicated by shortening of thrust, and support buyers not buying, as indicated by it breaking support. They tried, but there was a feeble rally and it went lower, establishing trend. So there you go. There is the logic of the market. All right. Here, the supply comes in. Breakout buyers are not there. Support is not going to hold. Feeble rally makes a lower low, indicating what? Supply is still there. Right? When it does that lower low, you have a shot. And it goes down. Okay. All right, now let's try again. So now it's in a downtrend. In the downtrend, you don't see a shortening of the thrust because it didn't test. Instead, you have buyers. They take it to what? To resistance. So you pull back, and the sellers are still there. Ding, ding, ding. But what you notice is that although it didn't break that, it's testing an edge right here. It's testing that 115. That is, and that from there it rallies. So again, it establishes trend. Trend is established right there, done. All right. Okay. So now we have a new trend, and we're going to examine it in the same way that I showed you. 536. Yeah. 678. What happens to the volume? Is it decreasing? No. Is there lessening of the demand? No. It's increasing, and good price spread, meaning bullish. Bullish. The next rally goes from 678 to 563. It's also bullish. So what is that telling you? There's no lessening of the demand. There's no shortening of the thrust. Trend is not in any danger at all. And this is just a minor chart. Like, I'm not, these are minor trends. But the same thing can be applied to any chart. Anytime. Alright, so that's the lesson for today. Thanks. Bye.